Hey everyone, how's it going? My name is Richard Moglen. Welcome back to the weekly watch list video sponsored by MarketSmith. As always, we'll go through both the fundamentals and technicals of all the stocks on my focus list, and let's dive right in and start with AI. So first things first, looking at the earnings and sales, you can see there has been some nice growth a few quarters ago. Last quarter wasn't great, and you can see it's not supposed to be profitable in 2021 or in 2022. The IB ratings are decent, the EPS rating is pretty poor at 57, and the overall composite rating is an 84. However, you already have 75 funds invested into this company, as well as 2 high-quality funds and also Fidelity Contra Fund, especially, already in this stock. And looking at the chart, you can see it's forming the stage 1 cup with a standard pivot of 183.90. Depth is 39%, and it actually is also a VCP pattern. Here's one contraction, another, then it broke out, and now is pulling back to that breakout point. So what I'm looking for is potentially a 2-2 reversal with a standard pivot of this high right here, or eventually a breakout above this high as well. So that is C3.ai, and I also like the volume contraction here within this pullback. That's very, very constructive. So moving on, we've got ARRY, a solar name, and you can see very strong growth a few quarters ago. Last quarter wasn't great, earnings down 67%, and you can see that the estimates for 2020 and 2021 are decent, although estimates are down. The EPS rating is only a 30. Group RS is an A+. SM rating is a B. Solid IBD ratings, except for the composite rating, is an overall 60. However, you can see that there's already 291 funds invested into this company, and there's 2 high-quality funds in there as well. And looking at the chart, you can see it's forming a kind of tight area here after a move down right at the kind of IPO standard pivot of 44.44. So I'm looking for a breakout through this level. I like the upside reversal here on this last bar on Friday. That's very constructive. The RS line is basing with the price, and the RS rating is pretty poor at 44, but this is an IPO. And within this contraction, you can see volume is actually decreasing, which is once again very constructive. Moving on, we've got Bandwidth Inc., and you can see very strong numbers here. Last quarter earnings up 500%, sales up 40%, and after-tax margins up 7.6%. And you can see kind of acceleration in terms of earnings, sales, and margins the past 3 quarters, and actually all 4 quarters here. But you can see that the estimates for 2021 aren't super strong, actually down 22%, although estimates revisions are up at this time. The overall EPS rating is a 73, Group RS is a B+, and the overall composite rating is an 86. And looking at the fund ownership, a nice increase over the past 2 years, and you've got 3 high-quality funds invested into this company. And overall earnings are in 12 days, so keep that in mind, but it's forming this really nice handle within this longer-term stage 2 consolidation with a standard pivot of 198.60, but I'm looking to get in if it breaks this downward trend line right here on above average volume. Not super dry up here, but this high volume day right here is actually lining up with this kind of upside reversal action where it finished well off the lows. So that is Band, and next up we've got CELH or Celsius Holdings. This has been a monster stock, and overall very strong numbers here. Last quarter earnings up 100%, sales up 80%, and after-tax margins up 12.9%. And estimates for 2021 are up 17%. Decent IB ratings, the composite rating is a 93. Great growth in fund ownership, but you don't have any high-quality funds in this stock just yet. And as for the chart, you can see it's moved up strongly from the stage 2 consolidation, is actually forming a potential high tight flag here. And overall, I'm looking for a break of this downward trend line or potentially a break of this kind of sideways pivot here. And this day, the high was 67.55. Overall, RS line is basing with the price. RS rating is very strong at 98. And this is a very, very strong stock that likes to trend above that 21 EMA. So you could also use an undercut and reclaim of this key moving average. Moving on, we've got CRSR, which I do currently own. Great numbers in terms of earnings and sales the past 3 quarters. Last quarter earnings up 194%, sales up 70%, and after-tax margins up 9.5% as well. The estimates for 2022 are up 14% with the revisions up as well. EPS rating is an A2. Overall composite rating is a 96. Nice growth in fund ownership the past 2 quarters, but you don't have any high-quality funds in there just yet. And overall, it is still within this longer-term base, and it has had trouble kind of breaking this 44 mark here. But a nice reversal on this Thursday after it drifted down on earnings. So this is a kind of longer-term base, so I do want to see it kind of build out here and then break out on above average volume. but I do like how the last 2 days have been on decreasing volume and overall pretty good action considering the initial kind of EPS huge shakeout here. Next up, we've got DKNG, which I do currently own. You can see very strong growth in sales the past 3 quarters, but it's not supposed to be profitable within the next 2 years. Overall composite rating is only a 73, but you've got huge growth in fund ownership and 5 high-quality funds in there as well, including Fidelity Contra Fund. You can see it's within this longer-term base, and it has moved out of the stage 4 cup with handle, but now is pulling back to the pivot on below average volume. So what I'm looking for is a 2-2 reversal and eventually a breakout of this handle to new all-time highs above the 64.19 pivot on above average volume, and I'll add to my position at that point. Moving on, we've got DocuSign, another longer-term base here, and overall you can see excellent numbers here. Last quarter earnings up 100%, sales up 53%, and after-tax margins up 12% as well. The estimates for 2022 are very strong, up 51%, with the revisions up as well. Overall composite rating is a 99, great growth in fund ownership, and a whole bunch of high-quality funds in there as well. And as for the chart, it is within the stage 2 longer-term consolidation. Standard pivot is 290.23 all the way up here, but I'm looking to add to my position, which I just started on Friday, if it continues to fall through from this kind of intermediate term breakout through this 263 pivot. And overall, the RS rating is an 85, and the RS line is basing along with the price. Next up, we've got JMIA Technologies, and you can see there's not really any growth numbers at all. It's not supposed to be profitable within the next 2 years. IB ratings are okay. The overall composite is an 81. And looking at the fund ownership, not a huge increase over the past 3 quarters, although it is up from this past summer, and there's no high-quality funds in there as well. And look at the chart, you can see it moved up strongly from this kind of a longer-term base here, and also this intermediate one. And at this point, it's actually kind of basing and pulling back towards its last green line, and is holding that 60 mark pretty well. So I'm looking for a 2-2 reversal above this high on above average volume, and eventually a breakout into new all-time highs above this day right here at 69.89. So that is JMIA, and next up we've got Moderna. We're all familiar with this name at this point. You can see excellent growth in sales the past 2 quarters. Great growth in EPS is expected in 2021, obviously, and the revisions are up as well. But the overall composite rating is only a 74. We've got nice growth in fund ownership over the past 2 years, and 2 high-quality funds in there as well. And as for the chart, you can see it's within the stage 4 cup, and the RS rating is a 97. RS line is right near all-time highs, and it just kind of shook everybody out here. Now is back to the pivot, and it's pretty tight along this area below this high at 189.26. So that is MRNA, and next up we've got NIO, which is another one I currently own. And looking down here, you can see great growth in sales the past 2 quarters, over 100%, but it's not supposed to be profitable in 2020 or in 2021. And looking at the IBD ratings, you can see overall the EPS is only 51, but the overall composite rating is a 94. And look at the fund ownership, you can see it's basically gone from 103 to 663 in basically 2 years, but you don't have any high quality funds in there at this point. And as for the chart, you can see it's been pulling back along this stage 2 cup pivot, and now is pulling back on below average volume this past week. So I'm looking for a reclaim here to add to my current position right here at a 2-2 reversal. And you've also got these pivots as well, which you can use along with this one, eventually all-time highs at 66.99. So that is NIO. And moving on, we've got NLS, which is also on my list this past week. And overall, you can see great growth in earnings, sales, and margins the past 3 quarters. But you can actually see that in 2021, it's actually supposed to decrease in terms of annual EPS, although revisions are up. And overall, the EPS rating is a 73. The overall composite rating is a 93. And look at the fund ownership. You can see this is a potential turnaround story here, and you don't have any high-quality funds investing into the stock. Earnings are in 9 days, so keep that in mind. But right now, it's right at the top of this cup here with a standard pivot of 27.55 and pulling back here on below average volume. Moving on, we've got Plug Power, and you can see great growth in sales the past 3 quarters. Last quarter sales up 80%, after-tax margins were down 36.8%, and it's not supposed to be profitable in 2020 or in 2021. The EPS rating is very poor at 21, but the overall composite rating is an 82. And look at the fund ownership, you can see great growth over the past 2 years, and 3 high-quality funds in there as well, which is always good to see. And look at the chart, it's acting very strong. You can see it really rocketed up here with a bunch of gap ups on volume, and now it's forming this tight, tight flag and pulling back to 21 EMA, and we had an upside reversal on Friday. So it looks very good. You can see a decrease in volume within this base, which is always good. So I'm looking for it to take out these highs right here and move up towards all-time highs. Moving on, we've got Peloton, and you can see great growth in earnings, sales, and margins the past few quarters. Estimates for 2022 are up 122%, although revisions are down. EPS rating is a 73, and the overall composite rating is a 92. And look at the fund ownership. You can see great growth over the past few quarters and 2 high-quality funds in there as well. And look at the chart. I did add to my position on this Friday, but I'm looking for fall through above this high and eventually a challenge of all-time highs up here at 171.09. And overall, it just has been kind of going sideways after a breakout of the stage 1 consolidation. The RS rating is a 95 and the RS line is basing along with the price. Moving on, we've got Tesla once again. You can see great growth in terms of earnings and sales, great estimates for the next 2 years. Overall composite rating is a 99. Great growth in fund ownership, 3 high quality funds as well. And as for the chart, you can see it's flagging here below 900. And once again, it's a potential high tight flag, nice upside reversal action on Friday. So I would expect it to challenge these highs here. And I think it is actionable if it retakes that 21 EMA, which it likes to trend above for extended periods of time. So that is Tesla, looks pretty strong. And moving on, we've got TTD, which has been forming a little bit of a base here. You can see great growth in earnings and sales the past 3 quarters. Last quarter, earnings up 69%, sales up 32%, and after-tax margins up 29% as well. You can see that the EPS estimates are up 35% in 2020, but only up 0% in 2021. The overall EPS rating is a 95, great IBD ratings here, and the overall composite rating is a 98. Looking at the fund ownership, it's basically doubled over the past 2 years, and you've got 4 high-quality funds in there as well. And as for a chart, you do see a little bit of distribution on the left side of the base, but so far it's moved up well and it's tightening up on this right-hand side, forming a kind of low handle here. It's kind of a cheat entry, but overall looks pretty strong, and I think is actionable through this area on above average volume. I love the volume drop off within this base. That's very constructive. And overall, this is only a stage 1 base. So that is TTD. And last on the list, we've got Zoom Info Tech. You can see great growth in earnings and sales the past 3 quarters. Last quarter earnings up 120%, sales up 56%, and after-tax margins up 34.7%. Great estimates for 2020 and 2021 as well. EPS rating is an 80, and the overall composite rating is an 88. And look at the fund ownership, nice increase over the past 2 years, and 3 high-quality funds in there as well. And overall, this has been very choppy in here, but it's finally broken out of this kind of longer-term consolidation. And overall, just broke out of the stage 1 cup within the longer-term IPO base. Let me zoom out here a little bit. So it is below the all-time highs, but is forming a little bit of a cheat entry here after a nice move to end the week after this big upside reversal, which probably shook a lot of people out. So that's my plan for ZI, and overall my top 3 steps for this week are CELH within that high tight flag, NIO to move up from this low volume pullback, and also plug within that high tight flag as well. So I hope you guys enjoyed this video, and if you did, please go ahead and leave a like down below and subscribe if you are new, and let me know down below in the comments what stocks you are watching for this upcoming week. Best of luck. I hope you guys have a great rest of your weekend, and I'll see you guys in future videos.